Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for Singapore FinTech Festival coverage is Patrice Conxicoeur, Head of S.E.A. Asset Management at HSBC. We also have Niels Fibaek-Jensen, co-founder and CEO of Matter, to discuss global trends, challenges, and drivers within ESG investing. Patrice and Niels, it's great to meet you virtually. Welcome to Trade Talks. And Patrice, let's start with you. Tell us about HSBC Asset Management's role in Singapore and its approach to sustainable investing.
Thanks, Jill, and good morning, everyone. So our role in Singapore is, of course, to be the arm in Southeast Asia of HSBC Global Asset Management. And for those of you who wouldn't know us, we're a $570 billion asset manager covering a range of asset classes, actually a wide range of asset classes. When we talk about ESG issues, essentially we have been convinced for a long time about the importance of those issues in driving company performance or driving company risk in a number of ways, and that's reflected in, for instance, our signature of the PRI principles in 2006. Practically today, what does it mean? It means weaving ESG considerations in everything we do, and particularly in the analysis that we do of companies and securities, with a number of angles which are specifically about carbon and low carbon impact and opportunities, risk and opportunities represented by climate change, broadly speaking, but also engaging with investee companies and reporting on this engagement, as well as working with policymakers and regulators around the globe, to mention a few things.
Niels, tell us about Matter and the collaboration with Nasdaq around the ESG footprint offering.
Thank you, Jill, and thank you for having me. Matter is a Danish fintech company. We're 16 people working out of Copenhagen, and we specialize in providing sustainability analysis and reporting solutions, including in collaboration with Nasdaq around the Nasdaq ESG footprint. We started about 4 years ago. Originally, we were actually a pension startup and launched the first 2 sustainable pension plans in Denmark back in the days. And then we realized that what we were perhaps good at was actually helping our clients understand sustainability and helping report what does it actually mean to invest sustainably to retail investors. And on the basis of that, we built the Nasdaq ESG footprint together with Nasdaq to build a solution to make it easier for banks and asset managers to communicate and report sustainability to their clients on listed equities and a number of sustainability criteria. We also just announced our Series A investment led by Nasdaq Ventures, and therefore, of course, work very closely with the Nasdaq team.
Niels, thank you. Moving along to higher level ESG topics, what are the key global trends within ESG investing?
So it's difficult to talk about ESG investing this year without talking about the COVID pandemic. And we do an annual survey of investors and issuers in that respect. And 87% of investors we have surveyed tell us one of the results of the pandemic is that it has changed how they consider ESG issues. And that's true also for 92% of issuers. So practically, this means issuers expecting to be much more active in the green finance space in particular. That means also increasingly investors being conscious of issues related to risk and taking that into account in how they drive their investment decisions, risk and returns. And this point about worrying about giving up returns when tackling ESG issues for investors is clearly one that is progressively taking a back seat. We've commissioned some research on this, and this is actually backed up by numbers. If we think about, I would say, illiquid investments, clearly one area which is getting a boost from all of this is sustainable infrastructure, and this is something that very clearly both investors and issuers are looking to put more and more efforts into.
How have ESG investments performed generally and in 2020 in light of COVID-19?
Well, so one of the things we've seen throughout the pandemic is that a lot of throughout the recent years where investments and equities in general have performed very well is that people were waiting for what would happen in case of a downturn. And we certainly saw that with regards to the pandemic and the downturn we saw in the beginning of the year. What has been interesting is that a lot of the sustainable companies and the ESG funds have performed very well even throughout that downturn. And that has been sort of basically an important exercise in seeing how sustainable investments would cope with a downturn in the markets. Because over the last 10 years or so, much of the academic research has shown that it's certainly possible to create ESG and sustainable portfolios that perform on par with the market But now we've also seen that in the light of a downturn in the markets. And some of the best performing funds for this year have been with an ESG or sustainability angle.
We've heard a lot about regulation during the course of the coverage at Singapore FinTech Festival. What's the regulatory influence on ESG investments?
It's quite variable depending on where you are based and where the investors are based. And if I was to somewhat simplify, I'd say the regulatory influence is absolutely major in Europe. It's variable in North America depending on where you are in North America. And in Asia, it's nascent and emerging most of the time. But clearly, the interest there is growing and growing. And we as investors or fiduciaries investing our clients' money, I think increasingly what we are concerned about is regulatory convergence or something that we're looking for in order to make this more simple for everyone. But I think in summary, what we can say there is that from a very limited role just a short few years ago, we are increasingly seeing regulators pushing in this direction. And I think it's only the beginning.
I think from a European perspective, we see much of the same things. With regards to convergence, one of the difficulties is, of course, that there's a lot of different frameworks for what constitutes sustainability, depending on what angle of sustainability are we talking about. Is it environmental, social, or climate questions, or is it related to labor rights or human rights or corporate governance? So there's a lot of different areas to cover. What we're seeing in a European context is that regulators are setting, first and foremost, higher and higher demands to asset managers and investors, but also much more specific demands, and are asking for more and more detailed disclosures, which I think we expect that will continue to drive the interest in ESG, both investing as well as reporting for foreseeable future.
And that leads me to my next question. What are some of the challenges with ESG investing?
Sorry, go ahead, Niels.
I think first and foremost, one is, of course, relating to there is no uniform standard, or not necessarily one specific framework to work within for sustainable investments. In fact, there's a number of them, which of course make it sometimes difficult to navigate it for investors. And secondly, there's a question of data. In some parts of the world, we've come very far in having available data on companies and projects that would make it easier for investors to choose and analyze. And then there's a question of automation, which is that a lot of the analysis is still being done manually, also because the data is hard to find. And I think in the coming years, one of the demands will be for more and more automated solutions and more digital solutions to both analyze investments and report to both professional and retail customers. Sorry, Patrice, go ahead.
No, I was about to say exactly the same thing. I would echo every single one of the points you've made. In summary, data, availability, standardization, automation, and I might add also trustworthiness. In the ideal world, we have all of this, and the reality today is that all of this is work in progress.
In longer term, how will ESG look in 5 years? What are the key drivers? Because this seems to be not just a trend, but something that is here to stay.
So, we've already talked about one driver, which is regulatory pressure, but the reality also is simply investor demand is there. And this is something which is sometimes portrayed as generational, but I don't think it's limited to this. When we look at what investors want to do, and when we ask investors what they want to do, we now have a clear majority of investors around the world who have adopted themselves ESG principles for their investments, or who are planning to do so. So if we project ourselves in 5 years in the future or a little bit later, I think we're looking at a world where ESG principles are, I dare say, hygienic, as in the sense that I would expect investors and agents of those investors, such as ourselves, to routinely consider those factors as much as we routinely consider issues of profitability for companies or ability to repay their debt over time, and that sort of considerations.
And as we look to wrap up with your respective initiatives, Patrice, how can HSBC help promote sustainable investments?
So this is something on which we've made some very visible and very high scale pledges. So our aim really as a group is to aim to lead the transition to a sustainable future by thinking about not only our own impact, and to go, clearly the objective for us is to go carbon neutral by 2030, but also to align our financed emissions to net zero by 2050. And this is something that our colleagues in the bank have to bear in mind. But for us as the asset management arm of this group, this is really about helping to channel capital towards those companies that are best in class, so to speak, in this space. And by engaging with the ones who are not, and having a dialogue with them to, as much as possible, steer them in the right direction, if I can put it this way.
All right, thank you for that. And Niels, I'll give you the last word here. If you can let us know about the initiatives that matter going forward, and of course, how you're working with Nasdaq.
I think for us is, of course, we want to help financial institutions lead the transition to more green finance and more sustainable investments going forward. And as we talked about, there's a number of challenges in the ESG space that will hopefully be solved in the next few years, and which will also be sort of the challenges that need to be solved to take ESG investment to the next level and really scale the interest. Part of that is building more digital and more automated analysis and reporting tools for investors, both professional asset managers and banks. They want to enable their clients to understand the sustainability portfolio and really improve where they currently are, and set specific criteria for where they want to be in their portfolios. And of course, Nasdaq is a global technology provider and provider for a number of different banks and financial institutions across the world. So the aim for us is also to reach more clients and help them both understand the sustainability of their portfolio, report to clients. What would be, I think, a defining factor will both be our ability to provide new data and new insights to clients, at the same time helping with automation and digital solutions to sort of to take ESG to the next step and build some of the automations we've seen in other areas of finance and take that into the ESG field.
All right, gentlemen, thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.